Good morning, traders. It's 7:51 a.m. Chicago time on Monday, the 25th of March, 2024. A lot of people have their spring break this week. We have Good Friday this Friday. We have a holiday the following Monday, April 1st. So this is kind of a holiday season type of trade. This is episode number. Is that correct? I doubt that it's correct. Let me see. 2,643. Let's see. It is 2,643. We're recording early this morning. Solo dadding this weekend through tomorrow evening. And need to get the kids to school. So starting early so I can throw them in the car. Not physically throw them, but almost. Strap them in and head to school right after this at 8. So this will be a short one. Here's what we've got today. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance, not necessarily indicative of future results. The Convergent Trading pre-market summary sheet. Overall, mixed exposure this morning in terms of risk. Little tilted on the mild risk off. Not too much news. This is just in the flow of things here, as we discussed on Friday. Really slow news overnight. There was an announcement that Apple, Google, Meta are being probed by the EU Competition Commission under digital law, also challenging Amazon on its ranking practices for the various vendors on its website. It's being investigated for that. Bostic came out and says he only sees one cut in 2024. Used to see two cuts. What's priced in is three cuts. Only sees one cut in 2024 due to hot inflation numbers. And OPEC Plus sees no need for a policy changes or adjustment next week. With that, I'm going to go over what's going on this week. We do have some mild numbers today. We do have Fed's Cook, but for the rest of the week, the high-tiered numbers are German GfK consumer confidence tomorrow at 3 a.m. Eastern, durable goods out of the U.S. at 8:30, GDP on Thursday. Wednesday's got nothing. It's got the standard crude oil inventories. And then Friday's the big day for the Fed. Friday, well, we do get the French inflation rate expected at 2.7%, dropping from 3%. But more importantly, we get the PCE numbers, core PCE expected at 0.3%. This is a key input to the Fed right now, something that the market is very likely to react to. We have personal income and personal spending at the same time. That's Friday at 8:30 Eastern. And then we have Fed's Powell at 11:30 on Friday. We wrap up the week with the MBS manufacturing number out of China on Saturday. And then Sunday we have the Japanese Tenkan Large Manufacturers Index and the Kaikshen Manufacturing PMI on Sunday night. That's 7:50 p.m. and 9:45 p.m. The S&Ps in a multi-distribution profile currently. Oh, my news feed was really high. Multi-distribution profile currently 149,000 contracts, nothing extraordinary. The inventory is 71% short. The range is pretty good at 22.5 points, and the point of control shifted below 5,300. If you recall, last week it was above. Here's what I talked about on Friday. On Friday, we had a market that was holding above 5,300. The low overnight was 5,303. The high was 5,302. The high was 5,311. And what the expectation was, we are likely to go sideways. We are rolling over. We could see that from Thursday's action. Open, check, and then close near lows. So the expectation is that it would fill in the gap and hold steady. Here's what it actually did. There you have it. Same thing, the exact thing that was expected. Pretty much sideways, open, up, down, down just like I drew. Very balanced profile. We did check the prior settlement. We did check into the prior range, and we finished below the point of control, below the IB in what was a neutral day. Okay, so that's what we have. So that's what we have. This is very normal. We had, if you recall, on the Fed announcement, I said the point of control did not shift up. If you look at Thursday morning's Trader Bite, the point of control did not shift up. We finished at the high of the range on pretty decent structure. There's a little bit of weakness here in the single prints, but we didn't shift the point of control higher. The market has a hard time getting away from a point of control in this kind of scenario. So what did I say? I say expect this thing back at 47, 46. Most likely on any rotation down, this becomes our key test area. That's what I talked about on Thursday. And then in the overnight session, we have 52.7250. 52.7250 on the low, which takes us, even lower. So the range overnight's right here. The market is in a price discovery stint. The expectation is we're very likely to check the flagpole here. We have a prior high at 52.57 and a quarter, and we have this really all-important high at 46.47. That's really what's on deck for today. It is Good Friday this Friday. Looking at the schedule, we do have off. So what's up with this calendar? Let's see. Somebody's pointing out that it's Good Friday. It is Good Friday. Yeah, it says Friday the 29th. These numbers are coming out. Fed's Powell's speech. Let me check my other calendar and look at what's happening on Friday. Just to see. Yes, Friday confirmed. Friday's got all these releases plus the Fed. It looks like it's reflected in another calendar. So looking at the CME site, market pauses at the close on Thursday and not open on Friday. Friday's a holiday. So I'm not sure how they're going to pull that off there. Thursday, I have a regular day, no trading for March 29th trade in observance of Good Friday. Okay, so not sure. I have not seen that before. Usually they move those numbers around if that's the case. So I don't know if these calendars still haven't updated or what. I'm just going with what I have. Okay, so today, what have we done in the overnight session? We've tried to hold at Friday's low right here. We built a point of control right up here. But what we've done is we've broken lower. The delta is positive, slightly positive. So as price is moving down, the delta is continuing to hold steady above. To me, this looks like it has extended itself to the downside a little bit. We did roll over, and we are trading in that Fed day run here. So we've extended ourselves a little bit here. So we'll see how this opens. Very tricky morning. You're going to want to watch the 83 to 85 area. That's the LIS, or the line in the sand this morning. It's right here, this collision plus the mid and VWAP area. The VWAP's going to get dragged right into this box, and I'm expecting this thing to pull back and have a battle right in that 83, 85 area. So how it resolves on that battle is how it's likely to go. If it resolves upwards, then settlement becomes the key target, and we're back in Friday's balance zone, back to 5,300 where most of Friday's volume took place. right at the century figure and key strike price for the futures. So those become the key targets up here to the upside. Otherwise, we are likely to just struggle within the overnight range. Nothing too fantastic going on here. The NQ, same kind of story. NQ had pretty decent price discovery to the upside, unlike the ES. It did not have a neutral day, but today it came in and it's seeing a drop below the 18,500. This morning, the 18,500 is the line in the sand here, not the 18,540. We want to see how it treats the 18,500. If it struggles to hold and it starts to shift lower, then short side stocking for setups that appear on the short side only in the Nasdaq. If it pushes through the 18,500, then you're looking for balance in the Nasdaq, and it's likely to just fluff around in the 18,540 to 18,600 area. The Russell had a nice run on Friday, traded the best of the indices on Friday, had a quick push, a spike, consolidation, a nice little zipper that broke down. We established an opening swing low in the Russell right down here at 21.18, and then we made a run for that high and failed to push that high in a successful retest. Buyers failed to take us through the 2125.7, and once it broke the opening swing low, we got a nice little zipper and a little push into that opening swing low, and then from there it was a runaway market. Overnight, nothing to price in. It's trying to peek its head up, but the Russell looks like it's likely to rest today. Note on the Russell, as it pushed lower, it did go down in delta. There was some pretty good aggressor selling there, but as soon as it stabilized, look at what happened. Buyers came in and started lifting the offer, giving us a positive cumulative delta. This is some sort of a hedge getting into play here, or some fresh buying at these lower prices in the 2100 area. The Russell has 2100 as its line in the sand. We're going to gauge how the market wants to go based on how it treats the 2100. The expectation in the Russell is a push into 2100 before it decides what to do next. Crude is interesting. So let's look at crude for a second. Crude has, this is an all session profile in case you're wondering why your chart looks different, but crude has established that 81-ish is the balance point. It has had an excellent run up. As you know, we've talked about this pretty much every day. Higher low, higher low, higher low. And then we finally turned over. And what's happened in crude is clear double distribution profile. We open right in the lower distribution on Friday, tests right into the single prints, holds the single prints, and ends up with an inside balance day. And so far this morning, we have an inside day of an inside day, and it's going to be very, very important to watch what happens if it breaks to 81.45 and starts pushing. The next area up is 82.50. The next most accepted price for the full session is 82.50. Otherwise, if it breaks lower, if you recall, we talked about it pushing, the bounce zone being, the extreme of the bounce zone is at 80.40 really. And it broke above 80.40. We talked about this, and I said that it's very likely to roll over and check that 80-40 area from above. We went to 80.30, higher low 80.42, and so to me, if it breaks this low, it's very likely to float right back to where it came from. Let's go back to day session only, and it brings us right into this big messy area right here between 79, and if you recall, 79 to 76 is the key balance. This is the price range that crude has found its stability in. So if we break the 80-40, to me, it's likely to fill the gap that it left behind last week or the week before, and it's likely to push right back into the 79-76 range. I'll leave you with that. I got to run, take the kids to school. Good luck today, and I'll catch you tomorrow. Cheers.